Yesterday I posted a video just about reversals using SMT and reversal patterns. And the main thing I pointed out was this 15-minute bullish breaker with SMT down here. And look what's happened ever since. Right, so we had this SMT divergence right here. Notice how NQ came down and swept this low. If you guys haven't watched that video, I definitely recommend you check it out. But we got that SMT divergence right there. Right, ES fails to take the low. NQ takes it, and then we form this 15-minute bullish unicorn model because we have this low, high, lower low. We displace the previous highs, leave behind a fair value gap. Right, so our breaker block is the highest up close candle right here. Look at that. Breaker block right here, so we can title this as a bullish breaker. And then the fair value gap is all the way up here, so we have a big unicorn model. So the first time we trade into it, boom, we see a pretty good pump up to our buy side liquidity. Second time we trade into it, boom, we see another good pump up to our actual external liquidity, all the way up at the previous week high right here, and then up at this swing high up here on the hourly and the 4 hour. So that unicorn model took us all the way up to our previous highs, up to our external highs. So that's why the unicorn is such a strong entry model and reversal model, because we see this happening so consistently. So guys, just to break it down for you, so I sent an announcement yesterday, just to keep trying to update everybody. You might not have seen the announcement. We're coming into the market today with the thought process of not taking any trades and just more focusing on education and doing Q&A. But we are going to see if the market has enough volume to where it would be worth trading. Now the issue is it's kind of a no news Monday. Same with tomorrow, it's like a no news Tuesday. We don't really have any news. We only have some FOMC members speaking later. But the market has been moving pretty good pre-market. So we're going to see if we get a continuation of that, or if it's just going to be super choppy. So right now I plan on not taking any trades, but we will kind of just watch the market. And we're still going to do our analysis because I want to set us up for the week. So, and then just looking back on the 15-minute again, or on that 15-minute breaker, we also had an hourly fair value gap overlapping, another level that we bounced off of. And then this is the standard deviations from that 15-minute bullish unicorn. So we hit 1, we've hit 2, and we still have 3, 4, 5, and continued up to buy side. So something to keep an eye on there. Just if you don't use the unicorn model or the breaker block model, I definitely recommend you go watch my videos and at least start trying to chart it out and see if it's something that you like, because I know for me it's a great model and I love using it. So let's go to our weekly time frame. So overnight and this morning, we've already taken out previous week high. We already took out our previous day high, and we've taken out a bunch of buy side, right? So we don't have external buy side liquidity for a while, pretty much up until some highs up here on a little bit lower of time frames. But we look extremely bullish, right? Remember how we had this weekly SIBI right here? We're almost at the top of that weekly SIBI. And if we go down to a daily time frame, right, we're right in the middle of that daily SIBI right here. So we're going to want to see us push. But this was that buy side level that I wanted to see us get to right here at the swing high. So we already took that out pre-market. And then if we go down to a 4-hour time frame, we can look all the way to the left of our charts, and we can see we still have some buy side up here, right? We have this swing high up here, but we're almost, we're getting closer and closer to all-time highs here on NQ. Whereas ES is already at all-time highs. It keeps making new all-time highs consistently, but the 4-hour is a little, NQ is a little bit behind. So we're going to be, looking to see if NQ is going to start making a push. But that's really, we don't really have much buy side on the higher time frames until up here, 21,049. Okay, so let's go down to the 1-hour time frame. Right, 1 hour, we finally broke out of this accumulation. Excuse me. So we've been in this accumulation range since pretty much Wednesday, right? We have not been able to break out of this hourly accumulation, consolidation, whatever you want to call it. Even though there's been trades throughout this, all this accumulation, we have not been able to break out of it until this morning. So we finally broken out of the range. We finally taken buy side liquidity. But we do have SMT divergence at the highs on the weekly time frame because, again, over here on ES, we are making new all-time highs while NQ is lagging behind, right? So we've taken buy side out of an accumulation range. So what we're going to have to determine if this is a manipulation move up to grab all buy side liquidity with SMT and we're going to start seeing a reversal back down, or if this is going to be a strong continuation expansion move to the upside. So that's what we're going to be looking for. Let's look on the 15-minute time frame, and let's look for our Asia session highs and lows, London session highs and lows. So we can come all the way down here and notice that this is actually our Asia low all the way down here. Asia low is right there. And then we did have Asia high. Looks like, yeah, right about here. We've already swept that. So let's look for our London low. It looks like our London low is right here at 3 a.m. So Asia low, London low, completely left behind. We never came back for those levels. That just shows you how bullish we have been. Sweeping internal liquidity, sweeping external liquidity, and even forming another bullish breaker here on the 15-minute with the low high, lower low, displacement of the highs right here. Right, so another reversal pattern. After coming back down, we see another strong market structure shift back up with the reversal pattern, and then we see continuation up. So everything is saying bullish, bullish, bullish. Even from last night, everything was saying bullish, bullish, bullish. Right, I wasn't taking any trades last night. Wasn't really even looking at the market too much. But pretty much everything I was seeing, everything I saw this morning, everything I saw yesterday morning was telling me that price wanted to move higher. Pretty much everything was telling me price wanted to move higher. What did we do? Price moved higher, right? I even talked about it in my video that I posted yesterday on YouTube. So that's kind of what I have, right? So what we're going to do is we're going to wait for market open. But what I really want to do is leave it open for questions today. And we're going to just run through any questions you guys might have. And if you guys don't have a lot of questions, then I can run through some educational stuff. You know, we can go over some entry models. We can go over some things you guys might be confused about. And we can kind of use today as a learning day. Whereas I was going to take today off. We were not going to do any live sessions today, but I thought it would be a good idea for us, even if we're not going to take any trades, to at least be learning and getting some education in on our day off, right? Even if we're not going to trade, I still think it's beneficial for us to get prepared for the week, have a good weekly bias, a good framework for what we're looking for throughout the week, and learn whatever you guys might want to learn. So that's what we're going to focus on today. Hope you guys had a great weekend, though. Did you guys have a good weekend? Did we have a good weekend? See, Breezy, I know yours was tough. Yeah, Tony, my weekend was a little bit rough, not gonna lie. Yeah, Rulies. We know. Record-breaking weekend at your restaurant. Let's go, Glenn. Good stuff, man. Wait, what kind of restaurant do you have? That's sick. Very nice. Very nice. Small brunch place. Had a good weekend. Washington is starting to look beautiful now that fall is here. Yeah, man, same with Utah. It's so beautiful once the trees, all the leaves start changing. Mom's visiting. That's cool. Nice. That's always awesome. Always good to have mom visiting. A lot of tacos and beer. Nice. Oh, that's perfect. By the time you close your restaurant, the market opens. That's so cool. I see why you did a brunch place and not a lunch or a dinner place. Makes sense. All right, guys. Now back to the diet. Yep, exactly. Yeah, I went up to the lake on, when was that? Saturday. We drove up to the mountain. It's pretty cool. It's only like a 45-minute drive for me up to this lake. Just beautiful up in the pine trees. Got to see some mountain goats on the side of the road. That was cool. Haven't seen those up here yet, so got to relax a little bit, do some reading. So, yeah, I had a pretty good weekend besides Friday. Friday sucked. But after that, it was good. Good morning, AZ Sunshine. How you doing? Yeah, guys, I don't know if you can hear my voice, but I do have a little bit of a cold, so bear with me here. I'm just getting over it. Just getting over this cold. Morning, Slick. Morning, Forever Loading. Let's get it. Let's get it this week. So, for those of you that are just joining up, I kind of let everybody know already that we're going to be looking to see if there's any trades today, but more than likely, we'll probably use today's session as just educational, doing some Q&A, going over some different concepts. We're going to see how much volume there is in the market, right? If we're going to have a lot of volume here. So far, pretty decent volume going into market open because, guys, the New York Stock Exchange is open and the NASDAQ are still technically open. Whereas when there's a big bank holiday, these markets are closed, which is why we never trade those. But I'm still willing to, look for something today if we're going to see price action worth trading, right? But I'm not going to come into the market with the expectation of taking a trade. It's going to be more of being very patient and seeing if it's even worth it because it is really a no news Monday, right? Today and tomorrow could be very choppy days. So we're going to kind of see what happens here in the next 30 minutes. So market just opened. Remember, we did already take out some buy-side liquidity at this high right here. We just swept buy-side, external buy-side. Yeah, we don't really have much news at all this week. You're right, Sea Breezy. We don't have much news at all this week. Very, very light week of news. But I'm hoping that, we have some decent price action because we've finally broken out of this range, the hourly accumulation range. So I'm hoping that even without news that we'll still see some decent volume in our market. All right, so we just traded down into a 15-minute. We're seeing a bounce off a 15-minute. Let's see if we create a little bit of a bullish breaker here. Even though it's not really a reversal pattern, we can kind of check it out. If we go to the 15, let's go to the 15 and the 5-minute real quick. And let's go way to the left of the charts and see what buy-side liquidity we have over here. All right, we're going to have to go way back. Way back. All the way back. I feel like I'm missing something here. Where are our charts? Okay, we're going to go over here. So there's not, I feel like I'm missing something here. Going over here, I do want to see, it's way, way back, right? Way, way back. We can't even see it on the 5-minute because that's how far back it is over there of our data. Right, but if we go to like the 4-hour, right, we can see that data on the 4-hour. So we can't even really, it's hard to even see on the 5-minute, but on the 4-hour we can see we don't have external liquidity until all the way up here. We're in a bunch of imbalances. If we go to the 1-hour, similar thing, we have a bunch of imbalances. We don't really have any buy side up until all the way up here. All right, we got swing high here. We got swing high here. I'm not expecting us to expand that far today just because we don't have news and it is a bank holiday. But, guys, we have more volume than I expected coming into today. We're already seeing a lot more volume in this market than I expected. So we might actually see some real movement here. We might see some real movement. I'm not completely convinced yet. But just seeing our overnight move shows me that we already saw a lot more volume than probably most people would have expected today. All right, so we already traded down into a 15-minute. We're bouncing pretty hard. We're looking very bullish. Very, very bullish. But this is what's hard about trading at levels like this, is when we don't really have liquidity until all the way up here. I mean, we're very far away, right? We're about like 300 points away from any liquidity, right? So we don't really expect to catch a 300 point move in the market, right? Unless the market's moving like crazy and we're going to hold on to a trade for a long time. So we're going to have to kind of wait for internal structure to build. And what do I mean by that? I mean by the 1 minute, the 5 minute, right? The 15 minute. I want to see swing highs, swing lows, fair value gaps created. I want to see some more internal structure to start forming to see if there's actually going to be a trade worth taking. But what we can do is we can kind of start mixing in, any questions you guys have while this market is moving, while it's starting to move. We can start going over concepts, right? Today we're just running this session. We're not going to do a prop firm session. We're just going to do this session today. Me and the team after this are going to take care of some administrative stuff. We're going to, be working on some stuff. So we're not going to run another session. But what I want to do is answer your guys' questions, go over important concepts, right? Give us a good understanding of this week, how we're going to move forward. But so far, this pump is pretty crazy here. Look at that. We traded into the first fair value gap and got a crazy pump at market open. Nothing's really stopping us right now. Nothing is really stopping us. First 5 minute candle has been created. So we'll see if we create a 5 minute imbalance here, if we're going to come right back down. ES is still making all-time highs. Every time ES moves up higher right now, that's a new all-time high. NQ is still a few hundred points away from all-time highs. Right, if we look at the weekly time frame, let's look at the weekly on NQ. Right now we're at 25.91. All-time highs are at 21.237. So we're still like 700 points away from all-time highs. So we're still a long ways away over here on NQ. But we continue to push up. It's election season. When you see the market pumping, you know it's election season. They want this market looking good. They want the market looking good for elections. The volume's actually pretty decent right now. At least our first opening candle was pretty decent. We'll see how this 5 minute looks, this next one. We'll see if the volume starts dying out, but volume so far has been pretty strong on market open. We're seeing some more full body candles here. We're not really seeing any chop. We're seeing more, good candles. So that's a good sign. All right, but going into market open, I wouldn't have even looked to take this long going into market open just because we still had some sell side down here we could have came back for. Right, and I don't even know if I'm going to be taking a trade today. So I'm not going to jump on here and take a trade in the first 5 minutes of market open. All right, that's not something I'm going to look to do. But right now, we're just being proven that bullish order flow is still in control, that these longs want to keep pumping, that there's not much holding us back right now, and that the volume is pretty decent. The volume is actually pretty good. So since market open, we have not seen one down close candle. It's been 8 or 6 consecutive bullish candles here on the 1 minute time frame. And we're not creating really fair value gaps, which is one thing I don't like. All right, I like that we have some better looking full body candles, but I don't like that we're not creating any fair value gaps on the 1 minute time frame. That's what I kind of want to see happen. We'll just keep waiting, but for right now, what questions do you guys have for me? Is there any concepts you would like me to go over? Any ideas? Anything you guys might, be struggling with a little bit? Let's take this time to do some learning. You guys just let me know in the chat what you got. You guys let me know. Yeah, breaker blocks. Breaker blocks. Yes, guys. Thank you for saying that, John. John is also here for your questions as well. All right, we're both here for you. I've got the technical charting questions. John's got you on everything else. All right, so we'll go over breaker blocks. Matthew said, I've been struggling to try to figure out when or if I should even raise my lot sizes. Okay, that's something we can talk about as well. Yeah, let's talk about that 15-minute breaker / unicorn that I charted out. All right, so this is, I just want to read, if you guys didn't watch my YouTube video yesterday, I really recommend you go watch it because I do talk about this exact move and how we expect expansion to the upside because of this move. And look what's happened so far. We've seen expansion, right? So yesterday morning, I recorded this video expecting the longs to be in control. And what did we see happen? The longs took control. So let's just look at this 15-minute for an example of a breaker block and a unicorn. Remember, similar things. A unicorn is just a breaker block with the fair value gap. And if you guys are still struggling with breaker blocks or unicorns, I recommend you take out your notes right now and you write down these ideas, these concepts, what I'm telling you, because I know for me it was much easier to understand them after I'd written them down. That way I could go back to my notebook when I was trying to chart them out so I could know if it's a low, high, lower, low, right? So with a bullish breaker, we're looking for, write this down, low, high, lower, low, displacement of the highs. Right? Or you could even say displacement of previous high. So right here, what do we see? Low, high, lower low, displacement of previous highs, right? What does displacement mean? It means we closed above or we closed below. So once this candle closed above this high, that's displacement. That is how we just created our bullish breaker block. All right, so bullish breaker, we are charting out the highest up close candle, the highest bullish candle on the low to the high. So right here, if we look at this swing low to swing high, what is the highest up close candle? It's this one right here. This is the highest up close candle, wick to wick. Notice how it's higher than any of these other bullish candles throughout this move. Okay, so that's our breaker block right there. Right, so we chart out bullish breaker. Excuse me. All right, so we have bullish breaker right there. Okay. What's next? What's next? Well, now if we want to see the unicorn model, we wait for the fair value gap to form. So look at this big gap right here. This could be, you could even title this a breakaway gap, right? Because we're breaking away above a recent high, but this is a unicorn model because this fair value gap is overlapping this breaker block. So we have the low of the fair value gap here and the high up here. So this entire thing right here is the unicorn, right? So you can title this unicorn here, right? Because the fair value gap overlaps the breaker block. So that is our unicorn. So this one is a little bit harder to dial in your entries. And why is that? Because it's a pretty big range, right? This is a pretty big unicorn model. Typically, we don't see our unicorn models this big, but this was a strong breakout. So what I'm normally looking for is for when we tap back into that unicorn, I'm waiting for a reaction off of it to take me up. Normally, I want to keep my stop all the way below the unicorn and the breaker. But obviously, this move was such a big move that we can't really do that on this example. Right, so where would I be looking for my entry next? What time frame was this at? Let's see. This was 11:45. Okay, we're going into lunch hour. I probably wouldn't look to take it during lunch. I'd probably wait until after. So if we waited until after lunch hour, let's say 1 p.m. Where's our 1 p.m. candle? Okay, perfect. 1 p.m. candle right here. You know, this would have been a better entry level from the unicorn, and you could have looked to take it up to high of day right here. So off the unicorn, you're looking to target buy side liquidity if it's a bullish unicorn or sell side liquidity if it's a bearish unicorn, right? So where was our buy side liquidity? Our buy side liquidity was high of day right here. Boom, right there. That's buy side liquidity. That was our high of day. That's where you'd be looking to target your first entry for this unicorn, right? You'd probably be waiting for after lunch hour. You'd be waiting to see a strong reaction or rejection off the unicorn, off the fair value gap. And you can also go down into your lower time frames, right? Scroll down into your lower time frames and start looking for entries based off of these time frames, off of like the 5 minute and the 1 minute time frame, right? So you could have looked for an entry possibly off of this 5 minute bullish fair value gap here, right? This could have been your first entry level target. And you could have taken your first TP at this swing high right here. You could have sold. And what would have probably happened is if you would have sold here, you would have taken profit, moved your stop loss to break even. You would have gotten stopped at break even. But that's okay. That's when you wait for the next reaction or the next entry level. We came right back into the 5 minute. We bounced off of it again. And what you can even do is go all the way down to the 1 minute time frame and see if there's even better entry levels or entry models on the 1 minute time frame. Okay, so for our initial move, same thing. We had a 1 minute down here, 1 minute here. You could have waited for inversion. You could have waited for inversion of some fair value gaps, right? Let's see. This is kind of choppy, choppy, choppy. Not anything too great here. You might have missed out on this initial move, honestly, and then waited for the next one. Or you can see right here, we have a bullish unicorn on the 1 minute. Look, low, high, lower low, displacement of the highs, fair value gap left behind. We tap into the fair value gap. Boom. That's your entry level right there. So you can look for fair value gaps, or you can look for unicorns inside of unicorns. You can look for breaker blocks inside of breaker blocks. That's giving you extra conviction in this move. So we have a 1 minute bullish unicorn overlapping a 15 minute bullish unicorn. That's why we start at the higher time frames and we break it down to the lower ones to start seeing our entry models playing out on smaller time frames. And this is where we're looking for our entries. So we have low, high, lower low, displacement of the highs. So what's our breaker block? The highest up close candle right here. That's the breaker. Where's the fair value gap? It's overlapping our breaker block right here. So this is the unicorn right there. And look how we perfectly tap into the unicorn. So you could have looked to target your entry right off the first reaction of that. Keep your stop below the breaker. So on this one, you could have kept a 30 tick stop below the breaker. And if you're targeting this buy side right here, I'm normally looking to target most recent buy side liquidity, depending on what the risk to reward looks like. But if you were targeting that recent buy side, look, your first TP, that's about 87 ticks right there. So that's a 1 to 2 over almost a 1 to 3 risk to reward right there. Almost a 1 to 3 risk to reward because you use the higher time frame, the 15 minute unicorn, you drop down to a 1 minute, you found a 1 minute unicorn inside of that. You waited, found the perfect entry, boom, took your TP here. And then ultimately, yeah, you probably would have gotten stopped out of break even if you didn't sell everything there. But then you can come back and look for a re-entry. Okay, we come back down and we retest the unicorn again. Let's see, what time frame is this? This is technically silver bullet hour right here, right? This is silver bullet. So what are you doing? You're looking to target your fair value gaps. Okay, you wait for inversion of all of these 1 minute civvies right here. We create a bullish fair value gap right here. Boom. That's your silver bullet entry right there. This is why time and price is so important, because you might not necessarily be looking for this move at a different time of the day, but since it's silver bullets, you know that our analysis is telling us we're probably wanting to go for a buy side liquidity because we're bouncing off a 15 minute bullish unicorn. You drop it down to a 1 minute time frame. You see inversion of 3 bearish fair value gaps. We create a bullish one. Boom. You're looking for your entry right here. Okay, so you get your entry off the reaction. Let's say it's right there. You want to keep your stop below the fair value gap candle. So you want to keep it below this candle right here of the fair value gap. So that's, again, a 30 tick stop loss. And you're looking to target these highs now. Boom. That's over a 1 to 3 risk to reward. You just caught the perfect silver bullet long based off of your analysis from higher time frames all the way down to the 1 minute time frame. Okay. So now we're kind of going into multiple entry models in one. This is why time and price is everything. If it's silver bullet hour, you're looking for fair value gap entries and you're looking for us to run to liquidity. Notice how we came down, we grabbed sell side, we grabbed relative to equal lows, and then we got our reversal, bouncing off a 15 minute unicorn. We got inversion, perfect. We got our entry model right there. Fair value gap, take it up to the highs. Boom. That's the move. You don't even look to keep holding on to this one. You just sell everything at that high because we just hit our daily objective and you're good. You don't need anything else. So now if we go back to, let's talk about this morning. Okay, we came all the way back and look at the level we bounced off of. We bounced perfectly off of our 50% level of the bullish breaker right here. But that doesn't mean I would necessarily jump into this entry again. I need to see another strong reaction off of that bullish breaker, off the unicorn. So, excuse me. Wait, let's see what the market's doing real quick. Oh, wow, the market's still pumping, guys. Market is still pumping like crazy. Okay. Anyways, let's go back to our education. So, I'm going to delete some of this previous stuff that we just charted out, and we're going to go look to see what trade could we have taken this morning if, let's say, we were trading pre-market. What is the entry we could have taken pre-market? All right, let's look at it. So we formed, overlapping our unicorn, we formed another bullish breaker. Low, high, lower low, displacement of the high. So what's our breaker block? The highest up close candle on the low to high, the first low to high. Boom, this is our breaker. Okay, so we have bullish breaker right here now. Also on the 15-minute time frame. So this isn't technically a unicorn because this fair value gap is not technically overlapping. It almost is overlapping. You could almost say this is a unicorn model right here. You still want to trade out this fair value gap. So what you could do is you could have waited for this new breaker block to form, and you could have targeted your entry off this fair value gap right here. If you're expecting the longs to step in and you're looking to take it up to previous week high and ultimately up to our next buy side level up here, right? We have that buy side level right there. So you have two very key buy side liquidity levels. So you target your entry off of that 1 minute fair value gap right there. You keep your stop either below the breaker or below the fair value gap. So right here we have, it's a pretty big level. So you'd probably just keep it below the fair value gap. So you could keep it anywhere around here. Preferably you'd want to keep it down at the low of the fair value gap. So maybe you would have had to have had a 70 to 80 tick stop. But how many ticks are you targeting? Well, here you're either targeting this high. So you're targeting about 148 ticks for first TP, or you're targeting previous week high, which is over 200 ticks for first TP. And ultimately you're targeting this high for over 300 ticks for TP, right? So even with a 70 to 80 tick stop, the risk to reward still works there, and you could have just sized down in your positioning and looked to catch that whole trade off of the new breaker right here, because our higher time frame analysis tells us we are going long. We are looking for the longs to step in. The hourly, we traded into an hourly fair value gap right here. We traded back into a bullish unicorn. We created a new bullish breaker right here. Everything on this chart is telling me long, 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 long. So then you just have to be patient and wait for your entry model. Wait for your entry model, right? Don't get too aggressive. Don't try to assume that we're going to bounce right here. Because yes, we did bounce, but let's say you just assumed that we were going to bounce from the bullish breaker and you just jumped in the longs and then we just got a continuation down and broke through that level. That's why you have to wait for your entry models. What I see way too many people doing is trading every single fair value gap they see and then blaming ICT concepts when it doesn't work out. They say fair value gaps are a sham. They don't work because you don't know how to use fair value gaps. You don't know how to use these entry models. You can't just assume we're going to actually react off of every single fair value gap or every single entry model that we have. You have to align them with time, and you have to align them with the market narrative. That's the most important thing. So if you have a market narrative, let's say the market narrative is bullish, we have a strong bullish bias because the 4 hour and the 1 hour and the daily are telling us that. Then you drop it down into the 15 and the 5 minute, the 1 minute. You see your entry models playing out. That's when you're targeting your entry. What you can't do is just hop on a 5 minute time frame and just assume you haven't even done your analysis. You haven't even found your daily bias. And then we create a fair value gap and you just jump into a trade based off of a random fair value gap. That's how you're going to get absolutely smoked in this market. That is not how you're supposed to trade. And that's why so many people say that ICT concepts don't work, because they just assume that every little fair value gap should work because that's what they saw on YouTube. That's not the case. That's not true. You have to know which fair value gaps are going to be the more important ones, which ones are aligning with our higher time frame bias, right? So as we are going into silver bullet hour in a few minutes, right, these fair value gaps now are going to be aligning with our higher time frame bias because our higher time frame bias is bullish. So now that we're seeing fair value gaps forming on a 1 minute time frame, these fair value gaps are now going to start aligning with our higher time frame bias, right? Because we are very bullish. We are very bullish. So now we're looking for these fair value gaps to start taking us to buy side liquidity. Or if we're going to start seeing a reversal soon, right? Let's say we start inversing bullish fair value gaps. Now we're looking for bearish fair value gaps to start taking us down to sell side liquidity, right? Does that make sense to you guys? We can also look for some bearish examples, but I hope that's a pretty solid breakdown of a bullish breaker, a bullish unicorn, and how to use that and actually look for entries, right? That's the way I use them. That's how I'm successful with these entry models, because I'm not just assuming that every single one is going to work. I'm waiting for reactions off these levels, and I'm 100% making sure that they align with my higher time frame bias. That's the key right there. So, of course, Juan, our member of the week right there, guys. That's our member of the week. Wait, you're not supposed to full port on every fair value gap, right? That's what people think. That's what people think. People are like, fair value gaps are a scam. I'm like, you have no idea how to use them. So I assume everybody that says that ICT concepts are false or don't work are the people that use them for 3 months, never actually learned them and didn't know how to use them, and then started blaming the concepts for why they failed. Don't blame the concepts. If you didn't actually learn them, if you didn't actually learn how to use them, you can't blame the concepts. Because I'm telling you right now, they can work. They can work if you know how to use them. Yeah, exactly. Blame the one who made the concept. Okay, so that's just going over the bullish breaker. I hope that's a good breakdown. Remember, guys, I have videos about breaker blocks and unicorns. Maybe I'll make a new one. I think I might need to update some of those educational videos and make some new ones. So that's something I might work on as well. Maybe making a more detailed, but those videos I have are pretty detailed about breaker blocks, unicorns. Oh, and the only other thing I didn't talk about here was using I think I talked about it this morning, but using our Fibonacci retracement tool, right? So how do I use the Fibonacci? I use it from the first high to low or first low to high right here, right, like this, and I use the first standard deviation through the fifth standard deviation. So look how well these line up with liquidity levels right here, right? First standard deviation right here lines up not exactly with liquidity, but notice how right when we took out that first standard deviation, we saw a drop, and then we take it out again and we see a drop. Okay, where's our next one? It lines up almost perfectly with our external high up here. Perfect. And now we've taken out our third standard deviation, and now we can use these as confirmations of where our TP level should be. So right now, if these longs keep pumping, right, which they are, so we might actually be able to start looking for a trade pretty soon. This could be a TP level, right? Fourth standard deviation right there, and then fifth standard deviation. Those could be TP levels. I wouldn't say to necessarily use them as your main TP levels. I would say use them in confluence with liquidity levels or fair value gaps, and that's how you can kind of use standard deviation to kind of have a better expectation of where price might run to, right? So don't solely use these levels as your TP. Use them in confluence with liquidity. It's just going to give you a more conviction that price will probably run to that level that you're looking for. So that's the other thing I do. All right, so we have like 3 minutes going into Silver Bullet Hour. We're almost in the Silver Bullet. We have a lot more volume than expected today. Definitely a lot more volume than I expected. But again, remember that the New York Stock Exchange and the NASDAQ are open today. So it makes sense why we still have volume, but definitely a lot more than I was expecting. I don't expect this to be moving like this all day. I do expect this morning move to be the main move of the day. I wouldn't expect afternoon to be crazy, but we'll see. So even with no news, we're seeing strong volume and we're seeing a strong pump. So let's see if we're going to actually get continuation. We're almost at fourth standard deviation here. We're creating 1 minute fair value gaps now. We're almost into Silver Bullet Hour. But like I said before, we don't have external liquidity until 28.6750. right? So we are still about 200 points away. We are still about 200 points away from our nearest external liquidity level. So we got a long ways to go. Still a long ways to go. Yeah, it's been pretty wild so far. I mean, since market open, you guys remember we talked about that 15-minute fair value gap right here? This was not something I was going to look to trade because I needed to see what the market was going to look like before. But look at that pump off of that level. Pretty insane pump off of our 15-minute fair value gap. Not really any pullback today, right? No pullback today. On the 5-minute, we can see fair value gap left behind, fair value gap left behind. If we go to the 1-minute time frame, let's see. Not really, we didn't create any fair value gaps here. One left behind here. Fair value gap left behind here. Small one here that we inverse. So we haven't really seen price pulling back whatsoever into real levels of entry. And that's kind of the problem with the day like today, is you really want to see, if you want to catch these longs, you want to see price pull back into a good level, right? We haven't done that. So you can't go and chase price, right? I would much rather stay out of the market completely today than try to force entries chasing these longs on a bank holiday and get absolutely burned, right? Let's see. Yeah, pretty crazy, right? 400 ticks with no pullback. Like the most pullback we've had, we see little moves here, but we don't trade back into a fair value gap. Little move here, we don't trade back into a fair value gap. We don't even trade back into the order block here, right? So not really any levels of entry on this move, except for at market open. This move right here, this could have been your only entry, was off the 15-minute fair value gap. You know, or if you got in at a good level, maybe based on a different strategy or a level that you had conviction. Maybe it was this 2-minute bullish fair value gap here. Maybe that was your entry. I'm sure there were some other time frames we could see, but let's look at the 1 hour because we just closed. That 1 hour candle is insane, guys. Insanity on a bank holiday. So we just moved over 500 ticks on our first 1 hour candle on a bank holiday. So pretty wild stuff so far. Now we're going into silver bullet hour. Let's see if we're going to get continuation, you know, maybe up to 5th standard deviation off that unicorn model, or if we're going to start to see reversal. I wouldn't expect a reversal anytime soon. But if it happens, you know, we could look to take a short to kind of rebalance this market a little bit. If we look at the 5-minute, I'm just going to try out this standard deviation level real quick so that I can use a different Fibonacci. All right, so we have that 5th deviation there. So I'm going to get rid of this one real quick. And then what we can do is we can go from swing low to swing high on a 1-minute time frame. Or on a 5-minute or 15. We haven't formed a swing high technically on the 5-minute. But let's just say, for example, we do form a swing high here. Right, we use Fibonacci from the high to the low. And then we wait for price to retrace down to a discount. Or we take the short down to the discount. Right, and then we wait for longs to step back in again. That's kind of something I look for using the Fibonacci. So we're going to see right now, what kind of reaction do we get off of this 1-minute busy if we even trade into the busy? Right? Do we get a strong bounce off of the busy? And can we get a strong enough bounce to target recent high and our next standard deviation up here? Right? Or do we not even touch into the busy and we just start pumping again? Or do we run right through the busy and form a bearish breaker here, get a market structure shift, and catch a short down to the discount, right? Those are the things we'd be looking for at this point. That's what we would be looking for here. Happy Thanksgiving if anyone else from Canada. That's your guys' Thanksgiving today? Happy Thanksgiving. Happy Thanksgiving to my Canadian friends. To our friends up north. Mike, I've been to Canada once. And the people I met there were really nice. Is it true that most Canadians are actually really nice humans? Or is that like a false stereotype? Not in Toronto. He said false. Drake's from Canada. Yeah, that's true. Interesting. I always like to get my information from the real source. Well, isn't Toronto super close to New York? Excuse me, guys. Good old Canada. The only place I've been to in Canada was British Columbia. I went to... What city did I go to? It was one of the port cities. One of the port cities in British Columbia. My question is, why are you showing your face today? I want to see the hair. Why am I not showing my face today? Well, the reason is I'm using the camera right now to record. That is why. But you can see it right there. Braden just sent it. All right, we just traded into the busy finally. Let's see what kind of reaction we get off of it. Let's see if we get a real reaction off of this busy or if we're going to start trading through it. Right, you'd be looking to target this high if we do get a nice bounce off of it. And then ultimately fifth standard deviation up there. But if we run through this level, we're looking for a silver bullet short off of a bearish breaker. That's going to take us down to sell side. Down to a discount, right? Down to these lows. Down to a swing low like this one. Let's look at the 5 minute. We just tapped into a 5 minute busy that we created. So we'll see if we still get a reaction from here. We just traded into a 5 minute bullish order block that we created. All right, we just bounced off of the 50% level. We just traded into the 50% equilibrium of the 1 minute busy. So this is kind of the time when I like to see bearish structure created, and then if we're going to see a continuation, expansion to buy side, I like to see us creating 1 minute SIBIs to then inverse and give me a good entry level and confirmation to take long. So which fair value gap do I like better? I don't necessarily like one fair value gap more than the other. What I like is to use them in confluence. So if I see us bouncing off of a 5 minute, I'm obviously going to trust the higher time frame more, right? Yeah, right. I do trust the higher time frame more, but during silver bullet hour, guys, I trust 1 minute time frame as well. I trust the 1 minute fair value gaps as well. But I like to use them in confluence. So let's say we do trade below the 5 minute, right, and we inverse the 5 minute, I'm probably not going to trust this 1 minute as much, right? But if we get a bounce off this 5 minute, I'm also trusting this 1 minute. Does that make sense to you guys? You want to use them in confluence, but when it comes down to, okay, which one should I trust more? It goes along with market bias. What's your bias? And which one is higher? If I obviously am going to trust the 5 minute more because it holds more weight. Yes, it's a higher time frame. But you can use them in confluence. Now, let's say they were conflicting. Let's say right now we're in a 5 minute busy and we're in a 1 minute SIBI. I'm probably going to trust the 5 minute busy a little bit more, right? Because my overall market bias is bullish, right? But if we start to see a reversal, now I'm not really trusting my bullish fair value gaps as much, right? If we see this reversal here, if we come down and we close below this recent low, we create a bearish breaker, I'm not really going to be trusting my bullish fair value gaps as much anymore because I'm expecting this to now drop down to a discount, right? We just got a strong bounce off the 1 minute SIBI. And this is why you guys see me have so much patience, because what most people will do is they will jump into a long entry off this 1 minute bullish fair value gap, and then they'll get stopped out, and then they'll jump into a short entry off this 1 minute SIBI right here, and then this one will come back up and stop them out, right? I'm not saying that that's going to happen, but you can't just trust every single fair value gap, guys. You have to wait for confirmation. That's why I'm waiting right now. I'm waiting to see which one wins. Even though we bounced off a 1 minute SIBI, that doesn't mean I completely trust the shorts yet, because we have not closed below this low, and we also have not inversed the 5 minute busy yet. Do I like Bronson? I don't even know who that is. I have no idea who that is. All right, so we just traded back into the 1 minute SIBI. Action Bronson. That is not Action Bronson. No way. Like, I think I know what Action Bronson looks like. Right? That's not him, is it? You guys are throwing me off right now. And I know you guys were dying to know, but both of my fantasy football teams yesterday did amazing. Blew out both the teams I was playing, so I know you guys were dying to hear. You guys were dying to know how my fantasy team did, so. Okay, so we just inversed both the 5 minute busy and 1 minute busy. So now I'm starting to look for shorts, guys. Now I'm starting to look for shorts here because we closed below a 5 minute busy. We inversed the 1 minute busy. We just bounced off of a 1 minute SIBI. This is when I start looking for shorts here. Right? The last confirmation would be the bearish breaker right here. If we can close below this low, we just create a bearish breaker here. That's our bearish breaker block. Right? Because we have high, low, higher, high displacement of the lows. This is the breaker. I would keep my stop above the breaker. And I'd be looking to target the equilibrium of this range. Right? And I'd be looking to target those lows. Yeah, Cowboys suck. Cowboys suck. All right, so we still close inside of this level. We have not broken structure yet. We have not gotten our market structure shift. So that means I don't take my entry. Got a 1 minute busy here. Hey, you know, I would be nice, but I find that every Cowboys fan I know is always talking like their team is the best team in the world, and they don't have anything to show for it. But if you're a nice Cowboys fan, that's okay. I understand. Omar, you don't have to remind me. You don't have to remind me. I am not watching any more playoff baseball. Unless the World Series is Mets-Yankees, I'll watch that. That'd be pretty cool. I'm salty. I'm salty. Oh, I'm 100%. I want the Mets to win the World Series, 100%. I don't want the Yankees to win, but I would like to see Mets-Yankees. I think that'd be a pretty cool World Series to watch. New York would be buzzing. All right, guys, so I'm waiting for us to close below the low. We did bounce off this 1 minute busy here. And we also did trade into a new 5 minute busy. And we're creating a 15 minute busy down below as well. So that's why I wouldn't expect us to move too far down. I think the furthest I would expect us to go would obviously be like, I would take a TP here, and then I would think about maybe seeing if we can move down to that low. But I might actually target a short here, guys. I might actually look to take a short off this bearish breaker here. I would keep about a 50 tick stop above the breaker, and I'd be looking to take about 100 ticks of TP here. So if we trade back into this breaker, we just closed below the low. We just got our market structure shift here. I would think about shorting this if we can trade back into the breaker. Right now we have a 1 minute bearish order block overlapping our bearish breaker block. Just another confirmation. We're respecting bearish order flow. We're inversing bullish levels, right? So if we don't trade back, then I won't take the entry. But this is the concept, the exact concepts I've been talking about 24/7. This is the breaker blocks, right? This is the breaker block. This is how you look to trade the breaker block. So you can either get really aggressive, and right as we start to close below, you get your short entry, or you wait for us to close below, pull back, you take your entry off the bearish breaker, you keep your stop above, and you look to target either the equilibrium of a range or you target sell side liquidity. So right now, you know how you guys were talking about which fair value gaps do you trust more? I am trusting my 1 minute fair value gaps right now more than this 5 minute busy because we just got our market structure shift, because I expect the shorts to step in at least down to here. That's why I don't really trust this 5 minute more than a 1 minute right now. So that's why aligning your trades with your daily bias or your market bias is the most important part. That's more important than saying I trust a 5 minute fair value gap over a 1 minute. Why do you trust that fair value gap more? Does it align with your overall market bias, right? Right now, the 5 minute doesn't necessarily align with what I'm looking for because I want to see if these shorts are going to at least step into a discount of this range. Remember, we were looking for swing high to swing low. This is the discount of our dealing range right here. I want to see if we're going to trade down into it. Obviously, overall, we are bullish, right? On all of our higher time frames, we're bullish. We just created a 15-minute busy. So, but I wouldn't look for a bullish trade until I see it start inversing some bearish levels, right? So if you're targeting the lows, I would be targeting this 50% level right here as a first TP at 26.1075, right? Or you could even look to target a TP already because we did just trade into a 15-minute busy. So you do want to be a little bit more careful now that we have a higher time frame bullish imbalance here, and we just got some SMT at the lows, right? So those are two reasons you might want to either move your stop to break even or take a TP. Because look at this SMT. We got SMT divergence. NQ just came down and took out lows. ES has not even broken structure right here. So we have big SMT divergence. And we just traded into a 15-minute busy. So those are like a few reasons you might be thinking about moving your stop to break even or taking a TP. Did we just trade? We just traded into a bearish fair value gap right here. Look at that bounce. Look at that perfect bounce off that 1 minute SIBI. Like I said, I want to see us at least make it down to this level. At least down to this level right here. At least down. And I don't care if I don't take a trade today, guys. I wasn't expecting to take a trade today. If anything, I will probably just be tape reading this market today. If I don't get my entry opportunity, that's fine. But I'm hoping my goal for today is for you guys to be learning these concepts, for us to walk through these together and not focus as much on trading, but focus more on the actual concepts and the way I read the market. Because right now, pretty much everything we've talked about has played out to a T, right? Everything we've covered has played out almost perfectly. Look how we're coming right down to the discount of the range. Let's see if we actually make it to the discount. Silver bullet, fair value gap, boom. Okay, that's the first TP for anybody that did take the entry, right? Now you're holding down to this low. Now your stop is at break even, your stop is in profit, and you're holding down for the next low, right? This is where you sell either half or like 75% of your position, and then you look for a full TP basically until here, or you sell another runner there and you look for a full reversal down to here. I don't expect a full reversal. I just expect this to be a pullback move. Exactly, right? The banks are the ones that are manipulating. Well, not the banks. It's not really the banks. It's really these hedge funds and stuff, right? Obviously the banks play a part, but it's more the hedge funds you got to worry about. But you're right. If these hedge funds are not trading right now, these banks are not trading, you might not see as much manipulation in this market. That's for sure. Okay, so how you knew it was a breaker block before it broke the order block? For me, it was a long entry. Okay, that's a good question, right? That's a great question. So I didn't know it was a breaker block. I was assuming that it was going to become a breaker block because we were in silver bullet hour. We had strong SMT at the highs, right? If we go into silver bullet hour, which is 10 to 11 Eastern, and there's not really any buy side to be taken, then I'm more likely looking for price to come down to take some sell side and rebalance the range. So I was expecting pullback here because we were going into silver bullet. We'd been looking very bullish the whole morning. And now I wanted to see price kind of come back down and rebalance some of our range, right? I didn't expect us necessarily to keep going. So I was just waiting to see if we were going to close below and create the breaker or if we were going to bounce from the breaker. Since we waited, we realized that we closed below. Okay, we created our bearish breaker. We got a market structure shift down to sell side. We were respecting a 1 minute bearish fair value gap multiple times we traded into it. So everything was telling me that we were wanting to drop and rebalance this range, right? That's why we look at the equilibrium of our ranges so much, because it's so consistent that we see price when it's in a premium come back down for a discount, and when we're in a discount come back up for a premium, right? That's what we expect to happen. So the second I see a market structure shift, I'm looking for these shorts to come down to a discount, rebalance this range, and then ultimately I would expect us now to start pumping again and come back up for the highs. But that doesn't mean I would just necessarily jump into a long at the first fair value gap. I would need to see now the market start creating bullish order flow like bullish fair value gaps, inversing bearish fair value gaps, right, and giving me a good confirmation that the longs are going to step back in. Does that make sense, Josie? What's up, Brian V? No trades taken. I was looking at taking the short position here. I definitely wanted to take the shorts from here, but we didn't tap back into the breaker, so I just stayed out of it. I never took that entry. Technically, I could have taken this entry from here, but I was looking for more reward because this entry to the equilibrium wouldn't have been too much. It would have been like 80 ticks, so not too bad actually. But I was really just looking for this entry here. We never tapped back into it, so I just stayed out. So I'm more focused today on just more tape reading and teaching you guys these concepts more than taking a trade. Right? We don't always have to focus on taking a trade. Sometimes it's important to kind of take a step back from the market, read through what's going on, and that way you can get a better understanding of, okay, now when you do see good price action, now you have a more comfortable idea of these concepts and of taking these trades. Whereas if I just hopped on here and called out these trades, you might not necessarily know exactly why I took the trade. Even if I do explain it, you're so caught up on the trade that you're missing out on the actual lesson, right? You're missing out on the reason I took the trade. So that's why on a day like today, I want to focus more on the reasons I would take these trades more than taking the trade, right? Because again, guys, even I could still take a trade today, or I could wait for tomorrow, take a trade tomorrow, and we can get right back to it, get into our flow again, start trading. So I don't have to take a trade every single day. I came in today not even expecting to take a trade. So I'm completely okay with not taking a trade today. All right, I need to drink some water, guys. This cold is catching up to me right now. I can feel it. I'm just about to get over it. Just about to get over it. All right, so any other concepts you guys would like me to go over? We've covered the breaker blocks. We've covered the unicorn model. Remember, I have videos of all of these ideas, all of these models, so whenever you're confused, go check out the videos or hit me up and say, hey, I'm still confused about the breaker block. Can you explain this? Did I chart this right? What I would rather you do, I would rather you try to chart it out and then send me a screenshot of your charts and ask if that's correct, instead of just DMing me and saying, hey, what's a breaker block, right? Because I've already explained what a breaker block is to you. I have videos on what breaker blocks are. So if you're going to DM me or if you're going to send a message in the chat, I want to see you practicing. I want to see you actually trying to chart out these levels. That way, once I actually once you come to me, I can actually give you better help instead of explaining the whole concept again, right? If you can start practicing these things, even if you're completely wrong, that's fine. That's how we get better, because now I can help you through your charts, right? Instead of just explaining the concept, start putting it into practice, right? And then today, let's say I would challenge you today. This is my challenge for you today. If you have the time, sit on your charts and whatever concept you might be struggling with, maybe it's breaker blocks and unicorns, chart out 5 to 10 different breaker blocks and unicorns that you can find. Chart them out. And you can even send it into the chat and you can ask, hey, are these the right levels? Can somebody help me out? And I can help you out, or somebody else in the community can help you out. Right? That's what I would challenge to you today. Whether it's breaker blocks or a different concept, start practicing right now. Start charting right now to see if to actually start getting better at these levels. Yes, this video will be posted after the session. You watched my reversal video and I needed to have my TV on max volume to hear you. So could barely. I don't know why. Maybe turn up your volume. That's weird. On my end, the volume is good. Did anybody else have that issue? That's kind of weird. If that's the case, I can repost it. But that's, Maybe you had the YouTube volume turned down. That might be the issue. That's weird. I'm not sure why I did that. Well, if you want me to do what I can do for you as a whole, is I can just send you that video separately, not on the YouTube. So if you want to watch that video separately, I can just send it to you. And then see if the volume works that way. Maybe it's YouTube that's messing it up. Weird. Okay, guys, so this is when I expect the longs to start stepping back in, right? We came down, we rebalanced the market. That's why I said to sell most of your position at the equilibrium and move your stop loss to break even or into profit. Because look, we traded into a discount. We bounced off of the discount. Boom, we're right back up again. So now what am I looking for the longs? I'm looking for us to inverse the 1-minute bearish breaker, inverse this 5-minute SIBI, and I'm looking to catch the longs right back up to the highs here. Looking to catch the longs right back up to the highs. We are about to have SMT, but I expect these longs to step right back in. I'm not worried about the SMT right now. These longs, I believe, are going to step right back in. If we can inverse this breaker, I think these longs will come right back. But we have to see inversion first. We can't just necessarily take the entry just because we see the long stepping in, especially because we have SMT, right? You're right. You want to pay attention to the SMT. This is why I wouldn't take the aggressive long entry yet, because we see SMT divergence. We haven't inversed a breaker. Even if I want to see these longs come in right now, I still need to see us actually start inversing. Oops, wrong one. I need to see us start inversing, right? I need to see us close above this level. I need to see us push above this 5-minute SIBI. But look at the perfect bounce off the 15-minute, right? 15-minute here, 15-minute here, down to the discount. That's the exact thing we talked about. That's why I didn't say sell 25% of your position here. No, I said either sell 50 or 75 to 80% of your position here, right? And move that stop to break even or into profit. Because we expected price to reverse after hitting this level. If we didn't reverse, I would have expected us to go down to this low. But that's the furthest I would have expected us to go, is down to that low. Right? Does that make sense, guys? Does that make sense? There's going to be certain trades where you want to sell almost everything or everything. And there's going to be some trades where you actually want to hold on to some more runners because you expect expansion. This is not a trade where we expected expansion. We just expected pullback. We expected retracement. So you don't look to hold most of your position. You look to sell most of your position at this level. Because we're not expecting expansion. On this move, we're expecting expansion in the longs, right? So if I got into a long position here, we close above, we get some inversion, I'm looking to sell half my position here and probably looking to hold on to a good chunk of my position all the way up to 5th standard deviation. Because I'm expecting expansion, right? Expansion. I'm expecting us to break through the highs and continue because we are so bullish on the day. That's where these trades would be different. So look, now we're starting to move. I want to see us close above this bearish breaker, close above this 5-minute SIBI, and then I expect us to run right through that 5-minute SIBI right here. I do not expect us to bounce off this 5-minute SIBI. If we inverse this 1-minute bearish breaker, then I expect us to run right through that SIBI, even with SMT at the highs. I expect us to head right back up for the highs. Because my overall bias, my overall daily bias is very bullish still. That's why I don't care as much about the SMT right now. I don't care as much about that 5-minute SIBI. That's the way I'm thinking about the market. It's always, what are my higher time frames telling me? All of my higher time frames are telling me bullish, bullish, bullish. So even when I see these lower time frame levels, I don't really care about them because I expect us to run right through them. I might have more caution. Maybe I will look to move my stop quicker. So JB has been on a little bit of a hiatus. He's had a lot of stuff to take care of, some personal matters. So he has not been posting news, but if you want news, go to forexfactory.com, and that's where you can access the news. Yes, so we're looking for inversion of the 5-minute. We're looking for inversion of this bullish breaker or this bearish breaker, and then we're looking for the tap back into the inversion, and we're looking to take this long. And I might actually take an entry here if we get that inversion, because I do really like these longs right now. Thank you, Juan, for sending that. Okay, so we did close inside of the 1-minute bearish breaker. I don't like that, so I'm not going to take my entry yet. I do like that we inverse this 5-minute, but I will still wait for us to inverse the 1-minute bearish breaker. No, 100%. I get that. Having JB's guidance on the news is everything, and that's why we love that he does that here, and I think that's so beneficial for everybody. 100% I get that. So we'll keep you updated on when JB is going to be back, but he might need some time. But yeah, man, we appreciate JB so much. What he does for this community is pretty awesome. All right, so still no inversion of the 1-minute, so I can't take my entry yet. Cannot take my entry yet. Boom, boom, boom. Order block there at the low. Yes, so you're talking about this one right here? We also have one right here. Yeah, so that is an order block right there. You are correct, Honest Money. And then if we were to close above these highs, now we have this as an order block as well, these two down close candles. Technically, they're not an order block yet because we have not closed above the highs. All right, so this 1-minute bearish breaker is definitely holding us down right now. It's definitely holding us down. We can't break through it. And that's why you don't see me take an entry until I see us close above that level. This is why patience is everything. And sometimes we're going to miss out on moves, right? Like this one. I missed out on this move because I was patient because we didn't tap back into my level. I would rather that than force an entry, right? Because look, let's say I got very aggressive here and I took my entry before we inversed, right? I probably would have gotten stopped out already or gotten close to getting stopped out on this move. So again, patience is always going to be more important for me unless I have all the conviction in the world to get more aggressive. If I have a ton of conviction and I think this trade is not going to come back for us, then I will take a more aggressive entry. But I know that this one is going to take a little bit more time to start playing out, so I'll just wait for it. And if this one runs away and doesn't come back to my entry level, that's fine. I won't take the trade. Patience will always be more important to me because it has saved me from taking some very, very bad trades. It has allowed me to take very, very good trades with more conviction. Patience pays, patience saves. Put that on a t-shirt. All right, so we're getting a little bit choppy right now. We do see SMT at the highs. We're chopping around the bearish breaker. We're not seeing any follow through. Let's go to our other time frames again. 15-minute close bullish. We haven't seen the continuation yet, but we do want to see that continuation. Let's look at the hourly. Look how bullish the hourly looks. We're getting some strong pullback now. We got our strong pullback. Now we're expecting expansion. All right, so we still look very bullish overall. I honestly cannot tell you, Jack. I have no idea. No idea if that is up and running. I don't know what's going on with that. I'm just kind of waiting to... I'm waiting to hear. I'm waiting to hear. I know they had like a soft launch or something, but I don't know if it's like officially live now, or I don't know what's going on, to be honest. Yeah, it'd be cool if it's live soon. Hopefully. I would assume that they'd be up and running pretty soon, but I'm not too sure. The green candle at 714 not considered an OB. Let's look. The green candle at 714 right here. So that would technically be considered a bearish order block, right? That would be considered a bearish order block because it's an up close candle on the down move. But notice how we closed right above it. We pushed right through it, so no, it's no longer a valid order block. But yes, it was a bearish order block. Right? Because it's bearish because it's an up close candle on a down move. Oh, breaker. I wouldn't consider this really a breaker because it's not really a clear swing high to swing low. A swing high and a swing low is actually a 3-candle pattern. So you want to see a 3-candle pattern for it to be a swing high or a swing low. That's why this one is a breaker, because we see a 3-candle swing high, 3-candle swing low, 3-candle swing high. That's our breaker, right? But right here, you kind of see 2 candles, 2 candles. This isn't really necessarily a low or, a swing high. This is more of a swing high, but this isn't really a swing low. But I like where your head's at, right? That's where you got to be thinking. You got to be asking these questions. I love it. That's how we learn. So I'm still waiting for us to close above this breaker block. We still haven't done it. Looks like we're trying to here. We really want to start moving higher. Remember, we do have that 5-minute SIBI here, but I expect us to run right through that 5-minute SIBI. Okay, now we're starting to get above. Can we get closure above? Can we get closure above here? Still can't seem to do it yet. So now I want to see, since we've been chopping around a lot, I want to see some fair value gaps created here. I want to see at least one 1-minute bullish fair value gap created, because that would tell me that we're seeing a strong move up, that we're expecting continuation up to buy side. That's where I would look to target my entry. Right, so like this. I want this to now be a fair value gap. We finally inverse the 1-minute breaker, but we're not creating any fair value gaps yet. What we do have is a 1-minute bullish order block that we just tapped into. Right, so 1 minute plus OB. So you could look to target an aggressive entry off the 1-minute order block. Right, let's say you got your entry right here. You could look to target that entry. Honestly, not the worst entry. Not the worst entry, but what I don't like is while we're chopping like this, I don't like taking my entries while we're still chopping around. I like to see more strong full body candles, fair value gaps, showing me that the longs are really, really in control. Especially while we're trading into a 5-minute SIBI right now. I don't want to see weak price action right inside of a 5-minute SIBI. I don't want to see weak price action here, because that tells me we don't have the strength to run through the SIBI. I want to see strong price action with fair value gaps, giving me conviction that NQ really does want to run through. Because right now it's not showing me that yet. So that's what we'd kind of have to wait for, right? That's what I would wait for personally. We have this 1 minute SIBI here. I would expect this to inverse that level. Ultimately, we have the 5 minute SIBI above. I would want to see us inverse that level. I expect us to inverse that level. But right now, we're not moving strong enough to do that. So when I see SMT at the highs, and I see us getting a strong bounce off of a 5 minute SIBI, we're chopping around, we're not creating fair value gaps. That does not give me conviction to jump into a long. It does not give me conviction to jump into a long, right? Yeah, we're just chopping around, exactly. So there's no reason that I would take a trade right now until I saw something clear. Because this would be the worst entry we could take in all of the things that have happened in the market today. Right here in this chop would be the worst entry we could take in all of this, right? Even an aggressive entry from here would have been way better than trying to take an entry in the chop unless we see something clear. Even right here in the longs, an aggressive entry would have been way better than taking an entry right here in the chop. You know, unless we see some good inversion or something right now, like with this 1 minute SIBI, if we can really inverse this 1 minute SIBI with a strong up close candle, that might give us more conviction. Hey, that's fine, Matthew, right? As long as you understood your risk, as long as you knew it was an aggressive entry, if you're willing to take the aggressive entry, you have to be okay with that. You got to be okay with taking the loss. Right? If you went against your plan and took the aggressive entry, that's when you got to rethink what you're doing. But if it was a part of your plan, you were willing to do it, that's fine. There's nothing to be mad about. That's really weird, Brian. I would hit them up. Whether that's a prop firm or a live account, I would either hit up Apex or hit up Tradeovate and open up a ticket because that should not be happening. That should not be happening. That's very weird. That's good, Matthew. That's a great thing to do. I recommend that for pretty much everybody. If you struggle with over trading, or you struggle with revenge trading, or getting greedy, lock yourself out of your account. Lock yourself out. What is the best way to fight against temptation? Get away from the temptation. That's the first step. Remove yourself from the environment that is tempting. That's step number 1. What's step number 2? Building self-control and discipline, right? So then you could sit in front of your charts and still not take a trade. That's step number 2. But if you don't have that discipline yet, you got to remove yourself from that environment completely. What's up, E. Hardy? No, sir, no trades yet. Called out a few different levels that we thought about maybe taking a trade, but no trades. No, I started out with supply and demand. That was the original. I was trading options using supply and demand. That was my first day trading strategy. I used it for, how long did I do that for? I think I did that for like half a year, maybe 6 months or so. And then I started getting into ICT concepts. And I got into futures and ICT concepts around the same time. I tried trading futures for for a month or two using supply and demand. And then I found ICT concepts and I made a full shift over to that strategy. Yes, Matthew, that's everything right there, man. That is it right there. That is what I preach. That's what I preach. I love it. If you have that problem, get yourself away from it. You don't always have to, right now it might be hard to have the discipline, the mental discipline and fortitude to sit in front of your charts and not take a trade. And I understand that feeling. And if that's you, well, first of all, you gotta start working towards getting away from that and creating a real plan of discipline. But if you can't do that right now, just lock yourself out. Lock yourself out of your account. Don't even give yourself the opportunity to trade. Exactly. There you go, Matthew. I love it, man. Good stuff. Good stuff. All right, so looks like we're just chopping around a lot. So is there any other concepts, any other ideas you guys want me to go over? Looks like the market might just chop around a little bit. We're starting to move down a little bit more aggressively. Kind of an aggressive drop here, going back down. Coming back down, grabbing some relative to equal lows here, grabbing some sell side liquidity. All right, Matthew, you do that, man. Good stuff today. Have a great rest of your day, brother. Okay, what's your opinion on this? My situation here is I have pretty good risk management, so I don't blow accounts, but I'm still struggling to get a payout since April. Okay, well, there's a few things. A few things we could do about this, right? Number one, I will say to you that more important than anything else is the fact that you're not blowing accounts. That's the most important thing. You are already way steps ahead of most people in trading, right? So I would, first of all, be happy about that. Celebrate yourself in the fact that you are able to hold on to an account or multiple accounts for that long without blowing them. Because that's the first step right there. I'm telling you, now all it's going to take is patience, right? All it's going to take is patience and scalability. How are you scaling your trades? Are you adding into your winning trades to get bigger winning days? Or are you keeping small size even on winning trades? Because what I would recommend is if your risk management is so dialed in right now, and it's been that dialed in for so long, well, you need to start maybe think about scaling up in your trades that are winners, right? Not saying to scale up and start blowing accounts. What I'm saying is if you're in a winning trade, you can now maybe start scaling up a little bit and adding a little bit into your position. That way, when you catch a 200 tick trade, you just made maybe double or at least 1 times what you would have made before. That's why I think it's important to start scaling your trading, right? Cutting your losers and adding into your winners. Because it seems like now that's kind of the issue you're running into. Because I believe from what you said, you have a really good risk management plan. So you got to start adding into your positions on your winning trades. That way you can start actually, getting a payout or getting closer to getting payouts. And what you need to still emphasize is, okay, when you do scale into a trade, right? When you do scale in a little bit heavier into a trade, start tightening up your stop loss a little bit. So that way you're still risking around the same amount you would have been risking before, but now you're in a bigger position and now you can catch more of a reward on your trade. Right? So when I say scaling up, that doesn't mean that you keep a huge stop loss and now you're risking double what you would have risked before. But when you add into a winning position, that trade is already it's a winning trade already, right? So start trailing your stop loss a little bit closer and making it a less risky trade. Hopefully that makes sense. Juan said, I don't know yet when to add into my position. I'm afraid to scale and lose. Okay, so that's fine. If you're not ready to start scaling into your trades, that's okay. I would first focus on what C Breezy is talking about, right? C Breezy is saying he has his risk management plan very dialed in, right? So you want to make sure you have your risk management so good and so ready that by the time you're good to start scaling into your trades, you are prepared to take on the risk that you're going to take on. I make money, then get cracked so bad I got to dig it out the mud. Okay, so is it where you're kind of... Okay, that's a big problem, right? Cutting yourself short. let your trades play out. Stop cutting your trades early. Let your trades play out. That's a big reason that you're not, getting to that payout level yet. That might be the biggest reason. That might be the biggest reason. So that should be all you focus on for the next few months. That should be all you focus on for the next few months is letting your trades play out. If you have conviction in a trade, let your trades play out. Set your limit orders. Set your stop loss orders and let them play out. Let me read through. Every time I'm on here with you, I'm at work driving. It's tough. I see what you mean. Okay, well, then what I would say to you is continue with. The thing is, you're not blowing through money, right? That's the first thing that's important. Because what you could be doing is you're driving or you're at work and you're just blowing through all of your money, all your capital. That's the worst thing you could do. So I would keep consistent with what you've got going on right now because you are saving yourself a lot of money. And when you have a better opportunity, let's say you have a break or something, if there's ever a chance for you to do that, look to scale into your trades a little bit more, right? If you go in 2 to 4 micros, look when you're in a winning trade, maybe add into 6 or 8 micros. That way you can catch a little bit more profit, but still keep good risk management, still move your stop losses. But again, you're way farther ahead than a lot of traders. And I don't mean that to be negative to anybody else that's not at that point. But that you're already so much farther ahead than most people because most people cannot hold on to accounts for that long. That's impressive because I'm telling you, by the time you do get your payout, or maybe you have a little bit more time to trade more, dude, you're going to be chilling. You are going to be chilling. You're building the discipline right here. You're building the discipline. Let's look at the charts real quick. Okay, so we're dropping pretty aggressively here. Pretty aggressive drop. We never made it through the 5-minute SIBI, and that's why I never took an entry up here. Right? As much as I wanted to see price run through that 5-minute SIBI, we never had the strength to do it. We were chopping around. We never created bullish fair value gaps, so we were not proven that the longs wanted to continue. So the SMT and the 5-minute SIBI held us down. Now we're coming down and we're creating strong bearish order flow. But what I'm expecting now for the rest of the day, guys, is seek and destroy profile, right? My expectation now is seek and destroy. So I think we're going to come down and maybe sweep this low. And we might see us come right back up again, up to the highs, right? It looks like we're going to see some seek and destroy. Do you recommend to add it on a position around your first entry level so your entry doesn't move a lot or doesn't matter because you're not... It depends. I prefer to add into my full position around my entry level just because I like having my entry around the same level, but it doesn't always have to be that way because sometimes you don't get the opportunity to do that. So what I recommend for someone is pyramid entries. What is a pyramid entry? Let's say your full position is 8 micros, right? A pyramid entry would look like your first scale in is in 4 micros. And then your next scale in is in 3 micros, and then your next is 1. Or your first scale in is in 5 micros, your next is 2, your next is 1. That way, if you do get a re-entry, right, or you add into your position that's further from your entry, your original entry, now your break-even point isn't moving too far because you didn't add in too heavy a position, right? So if you want to add into your position, you want to scale your trades, start doing pyramid entries, right? Start doing more pyramid entries. So let's say for instance, let's use this short as an example, right? Let's say you did take this short. So let's say your first entry is off this fair value gap, right? This is entry number 1. Let's say your full position is 6 micros, okay? So right here, you scale in 3 micros. You scale in half of your position, okay? And now you're waiting for the continuation. All right, now you get pullback. Right here, you're adding into 2 more micros, okay? So now you're in 5 micros. But this one now runs away, and you have a great winning trade. You might have never had the opportunity to add into your last micro, but that's okay because you just added into 5 micros and you just caught that whole short. So that's kind of the idea of pyramid entries is you add into half your position, add into a few more, and now your entry would not have been all the way down here. Your entry is now somewhere, right around up here. It's still close to your original entry, which means you can still have pretty good risk management. How do you apply for different entries on Top Step X? So what do you mean by apply for different entries? You mean multiple entries with different TPs on Top Step X? Yeah, isn't there a normal buy sell button on the right side of the screen? By the way, guys, we have SMT at the lows now. We just came down and we finally swept this low. This is the low I was talking about before. Oops. So we have SMT at the lows right here. NQ came down and swept all of those lows. ES is still chilling all the way. It didn't even sweep this low right here, right? So we have big SMT divergence. What do I expect for the rest of the day? Seek and destroy profile. So now I would expect these longs to step right back in pretty soon, right? Even with inversion of 5-minute Sibi or busies, I would expect these longs to step back in. So where would I start looking for a long position? I'd probably wait for us to inverse this 1-minute Sibi right here. And then I would look for a long position off of the inverse and catch it right back up to the highs. That's what I would be looking for at this point, right? So this is where I would have taken full TP, would probably be at that low, right? Unless you have conviction that the shorts are going to keep going. My expectation would not be that the shorts are going to keep going, just because it's a no news Monday now and we've already made our big move. So now I would expect more seek and destroy profile. We have SMT at the lows. I would expect us now to start pumping a little bit. Final TP on my short was 220 ticks. Let's go, Sean Quez. Nice, dude. Hey, welcome back, Matthew. What kind of coffee are you drinking? Wish I full ported. We've all been there before. We've all been there. I used to always think that. I was like, oh, I wish I went in a super heavy position. And then the next trade, I'd get into a super heavy position, and then I would lose and be like, I wish I didn't get into a super heavy position. Shot of espresso. Very nice. Very nice. Good stuff, Sean Quez. Yeah, those shorts came in hard, right? We bounced off the 5-minute. Respected bearish order flow. We got SMT at the highs. Finally stepped in. All right, I wanted to see if we could make it up to that high one more time or get more expansion, but now it's looking like we're just going to go into seek and destroy profile for the rest of the day. That's kind of what I'm expecting now for the rest of the day. So you could still catch trades off seek and destroy, right? We just took out the lows. We just got SMT divergence at the lows. Now I would wait for inversion of a bearish fair value gap. I would look for us to tap back into the inverse. And I would look to target the longs up to recent buy-side liquidity. That's what I'd be looking for. Now, if we do see continuation to sell side, let's say we break through VWAP, then where would I expect us to go? I would expect us to then come all the way back down for Asia and London low, right? Which we had London low, where was it? London low is like all the way down here. I wouldn't necessarily expect us to come all the way for Asia low. But if we saw a strong reversal, we might come all the way back down, even to this bullish breaker down here. Not really expecting that to happen, though. I would expect more seek and destroy profile. Now I have to go use the bathroom. Yeah, espresso will do that to you. Trader Joe, I still struggle with revenge trading and overtrading, but having accounts with Top Step where you can lock the account has saved me a lot from losing or burning the accounts. That's everything, man. So important. That's one thing I really do appreciate about Top Step is the lockout feature. I'm pretty sure Tradeovate, doesn't Tradeovate now also for live accounts also have a lockout feature? I haven't really looked into it, but I'm pretty sure they do. I heard someone say that. Yeah, so even if you just trade a live account, if you don't have Top Step, you can also use that lockout feature as well. Nice, Mike. You're still leaving a runner right now? Still leaving a runner? Very nice. Very nice. So we just got more SMT at the lows again. Right? We bounced off the 1 minute SIBI. So we might go target more sell side here. We'll see what happens. When I see SMT like this, though, I would expect us to start reversing back to buy side. Looking for trades. So we've been more tape reading this market. There's like a few trades I was looking to maybe take. I was looking to take the original short from here, but we never tapped back into the breaker, so I didn't take it. So right now, no, not really necessarily. If the trade opportunity allows itself, if it shows itself, I will take a trade. But we're really today just more focused on education, focused on tape reading the market. Although today has been a pretty decent day of price action. Pretty decent day of price action so far. Dang, look at those shorts, guys. Those shorts are really taking control here. Really taking control. But notice how this low right here on NQ is all the way down here on ES. Right, so even if, or it's all the way down here. Right here. So even if NQ does take out this low down here, right? Let's just say, for example, it does take out that low. We still have crazy SMT divergence. Because look at, ES is all the way up here. Look at that SMT. Even if we do take out this low, we still have crazy SMT. And we just took out that low. We have SMT down here. Right? So a lot of SMT divergence here. So I would be waiting to see at this point, okay, are the longs going to start stepping back in? Are we going to maybe come down for one more sell side level? That's what I would be looking for here. Nice, Mike. But yeah, these shorts are definitely in control right now. Definitely in control. So we might see the shorts come down for more sell side. We did just start moving below VWAP. We did just start moving below VWAP here. We got a bunch of inversion, right? The 5 minute just inversed a bunch of levels. The 15 minute just inversed the 15 minute busy. So we could see this one start moving down more aggressively. The one thing I would be cautious of is the SMT divergence again. But yeah, guys, honestly, right, I think we've covered a lot of really good education today. I do want to open it up for any more questions that you guys have, because I might end the session soon, and I might not take any trades today. I'm okay with not taking any trades today. We'll see. Maybe if I do see another setup, I'll look to take one, but I really just wanted to focus on education today. Yeah, that's that low right there, guys. So that's the low I was talking about. We just completely rebalanced the entire range. This drop is pretty aggressive here. Pretty aggressive. Congrats to those of you that did catch that trade. Good stuff. But do you guys have any more questions for me? Any more comments? Anything you guys would like me to go over still? I feel like we've covered some good stuff today. After this, me and the team are gonna have a meeting. We're gonna be going over a bunch of administrative stuff to improve your guys' experience here. We are very focused on that, guys. We meet pretty consistently about how we can make this a better community. So that's something we're gonna be focused on today. And again, a reminder: no prop firm session today. We're just running this morning session. That's it. No prop firm session. You guys go out and enjoy your day today. Enjoy your day. Enjoy yourselves, even if you are trading. And yeah, I will post this recording, guys. Don't worry. I'll post it right after this. Yeah, Travis, that's very important, man. That's what it's all about. Jay Lee, don't worry. We'll look to get back on another winning streak. Don't worry about that. Thanks, Jack. Appreciate that, man. We are trying our best over here. And yeah, happy Canadian Thanksgiving to all of our Canadian friends. What are you guys doing trading on a holiday? The grind never stops. Nice, Sean Quez. Patience pays indeed. Patience pays. All right, guys. Well, that's all I got for you today. Appreciate all your questions, all your comments. Good job to those of you that were patient and waited for that short today. Good stuff to you. So yeah, we're gonna go have our meeting and go over some important stuff. But you guys have an amazing rest of your day. Please hit me up with any questions in the chat throughout the entire day, guys. I'll be around. Don't worry. I'll be around the whole day, so you let me know if you have anything for me. Remember, what was my challenge to you guys is whatever concept you might be struggling with, or maybe you want to start charting out breaker blocks and unicorn models, go chart out 5 to 10 of them in your charts. Send them into the group chat, at least one example. Or not the group chat, but the chat, right? The chat room. And see if other people might be able to help you, or I'll check it out and see if you're correct and give you some tips. All right, guys. Yep, exactly, Mike. That's awesome. All right, guys. Appreciate you. God bless. I will talk to everybody very soon. Stay safe today. Enjoy yourselves, especially our friends that are on holiday. And I will see you soon. Peace out.